So today we're going to wrap up our Options Traders Myth series with Options Myth number 10. And it goes like this. I'm losing money as an options trader, so all I have to do is adopt the strategy that all the other traders are making money on, and I'll start making money like them and my problem will be solved. Well, there's a name for that. It's called strategy hopping. And unfortunately, it doesn't work. It doesn't work because, as they say in investment literature, past results do not guarantee, future performance. And so that is as true of investments as it is trading strategies. You just can't follow a popular, recently successful strategy and assume that it will just continue to be successful forever. It's just not the way it goes. And the reality is more like this. Every strategy has good and bad periods. Market conditions that are favorable to that strategy or market conditions that are unfavorable to that strategy. And these things can come in bunches. You can have 8 great months in a row in a strategy and then 3 bad ones in a row. Very common that something like that can happen. There are reasons for that, but we won't go into that in this particular video. But the point is that every strategy does have good and bad periods. And so what strategy hoppers do is they assume that their recent failures with the strategy, even after in many cases a string of successes, but they'll assume that their recent failures in a strategy are just going to continue month after month after month, and so they decide to hop strategies. The problem is they hop on to another strategy which is just about to go into its rocky period, so they jump off of that one, hop on to the next flavor of the month, and they experience the same thing. This can actually happen where you just go from poor period for a strategy to another poor period for a strategy to another poor period for a strategy. And that is because, among other things, the market goes in cycles, high volatility cycles, low volatility cycles, big rallies, big sell-offs, channeling, whatever, and it goes into those cycles for a while and then it moves into a different cycle. Well, if the strategy you're moving into is dependent on a particular market cycle staying the same forever, well, realistically, that's not going to happen. And therefore, realistically, you're likely to be jumping in right at the wrong time. So it's a failed strategy. And let me give you a really good example of this. We sell a video course called The Bearish Butterfly by John Locke. It's a great strategy. Take a look at the results here from 2012 through 2016. It is a strategy that 3 of those 5 years had over a 100% return. And this is just following the rules of the strategy on a textbook basis. There was one year that was basically break even, 2013, and another year last year, which was actually the worst year ever for Bearish Butterfly. It lost 46%. The 5-year average is over 67%. So if you had just started trading the Bearish Butterfly in 2016, you got beat up pretty bad, and you would have to assume this strategy doesn't work, so I'm going to hop into another strategy. And had you done that, you would have missed the first 9 months of 2017, in which it ran at 100, it's kind of silly, these kind of numbers, but 150% return, although October and November are probably going to be losers. So let's drop that number down 60 points even to 97%. That would be the max loss on a Bearish Butterfly, although any strategy can gap through its stop, so it could have theoretically been worse. But let's just say it hits its max loss in both months and ends up with a 97% return through 11 months. That is not shabby, and that all would have been foregone by the strategy hopper who hopped out of the bearish butterfly strategy. Now, this is a pretty extreme example of what I'm talking about because it's such a pronounced move from a negative equity number to a positive equity number, but still, it does starkly illustrate the point that hopping from strategy to strategy is a failed strategy in and of itself. Now, this is not to say a strategy should never be abandoned. There are cases where there's something structural that's happened in the market that has stopped the strategy from being able to be successful. These could be volatility changes. These could be execution changes. Other structural issues can come up that can actually render a strategy no longer viable. But you don't know that after 2 months. You don't know that after 3 months. You may not know that after a year, whether there's been a fundamental shift or not. You cannot tell after a short period of failure that a strategy is no longer working. If you take that as some kind of a gospel to determine your future, it's not going to work. And so one way to pick up on this is to look at your back test, and you should always back test a strategy before you start trading it live with real capital. You look at your back test and see, have I seen a period like this in the back test? In a strategy that you back tested and discovered was a great strategy, have you seen a period like the one you're experiencing? If the answer is yes. Was the strategy viable anyway? If the answer is yes, it's hard to understand why you would abandon the strategy at that point. And so what's the conclusion? If the strategy is acting like it does in the back test you did, then you have no evidence that it's fundamentally changed, and therefore abandoning it makes little sense. Hopping from strategy to strategy often results in your jumping right into the worst period of each of the strategies that you're jumping into, and that certainly doesn't make sense. So don't be a strategy hopper. That's a failed strategy in and of itself. Pick a strategy or a series of strategies, better a series of strategies, so you can get some diversification, which actually work over a long period of time and stick with them unless something is emerging that makes it obvious that the strategy cannot work anymore. And that obvious thing is not that it lost 2 months in a row. That doesn't prove anything. There has to be something else going on, some execution issues, something structural that's changed. You can see it's changed. It's obvious it changed. In those cases, an abandonment of strategy would make sense, but that actually doesn't happen very often. So don't be a strategy hopper. Find great strategies that balance each other and trade them consistently. That gives you a chance to be a long-term, sustainable, successful options trader. Thanks very much. Hope you appreciated the Options Myth series. Hope you took these points to heart because they're real. They're based on experience of lots of options traders. And if you avoid these pitfalls, you can avoid lots of problems and instead focus on successful strategies for your future. Thanks very much, and we'll see you next week.